The S&P 500 just experienced its worst quarterly drop since 2022, plunging nearly 5% in the first 3 months of 2025. But while most investors panic, Wall Street's elite quietly accumulate specific stocks at record levels. Recent market data shows that during the April market correction, while institutional investors fled the market, retail investors poured in a record $3 billion in a single day, the largest daily influx ever recorded. They saw what I'm about to show you about how Nike, PayPal, Google, Amazon, and AMD, the magnificent 7 stocks that have dominated the market for years and have dropped an average of 16% this quarter. But hidden institutional money flows reveal that specific companies within this group are being accumulated by hedge funds at an unprecedented rate. Today, I'm revealing exactly which 5 stocks are positioned to surge as the market recovers, based on real data, not speculation. 3 years ago, I lost $42,000 on a single trade because I was following the crowd. I was listening to CBNC, following Reddit trends, buying whatever was popular. I was desperate and it showed in my results. That loss forced me to completely transform my approach to investing. I stopped following the noise and developed a system based on what actually works, studying institutional money flows, sector rotations, and fundamental analysis that most retail investors completely ignore. This system became so effective that I built it into a software platform called MarketDash.io. It's a powerful tool specifically designed to find truly undervalued stocks with massive growth potential. While most stock screeners just show you basic metrics, MarketDash.io analyzes complex valuation models, earning qualities, and hidden asset values that most investors completely miss. The tool identified all 5 stocks I'm about to show you when they were trading at significant discounts to their intrinsic value, between 15 to 30% below where they're trading today. If you want early access to these alerts, go to MarketDash.io right now to claim your 7-day free trial. I'll even send you my personal watch list of 15 stocks that my system is flagging for potential 2 to 3x returns this quarter. Now, let me show you exactly why my system is flagging these 5 specific stocks for explosive growth this April. These aren't random picks. They're backed by the same methodical analysis that's consistently outperformed the market. Stock number 1, Nike. Ticker NKE. Nike has been beaten down over the past 18 months, dropping nearly 30% from its all-time highs. Wall Street has been obsessed with Nike's challenges in China and competitive pressures, but they're completely missing the bigger picture. What most investors aren't seeing is that Nike's direct-to-consumer strategy is finally hitting an inflection point. Their DTC sales now account for over 45% of total revenue, with profit margins nearly double their wholesale business. I started building my position this month at $55, and I'm planning to add significantly more this month. Their upcoming earnings will likely reveal accelerating growth in their app-based sales, which Wall Street analysts have consistently underestimated. Don't make the mistake of waiting for the big earnings beat to hit CBNC. By then, institutional investors will have already repositioned and you'll be buying at much higher prices. Stock number 2, PayPal, ticker PYPL. PayPal is perhaps the most misunderstood company in fintech right now. While competitors have captured headlines, PayPal has quietly built an ecosystem with over 430 million active accounts, processing near $1.5 trillion in payments annually. The reason I'm particularly bullish on PayPal for April is their imminent announcement of a revolutionary blockchain-based payment solution that will cut transaction costs by up to 80% while maintaining their industry-leading security. I actually discovered this opportunity through a conversation with a developer working on PayPal's blockchain integration. After researching further, I found that PayPal has filed 24 blockchain-related patents in the last year alone, something the market hasn't priced in at all. Most analysts have a hold rating on PayPal because they're comparing it to new fintech companies without understanding PayPal's massive scale advantage and upcoming technological leap. Stock number 3, Google, ticker GOOGL. Google might seem like an obvious choice, but there's nothing obvious about the opportunity I'm seeing right now. Despite being the dominant AI player, Google is still trading at just 22 times earnings, far below when its growth rate justifies. What most investors are missing is that Google's quantum computing division is about to announce a breakthrough that will revolutionize their AI capabilities. This will create an insurmountable competitive advantage in search and cloud services. I've allocated 20% of my portfolio to Google because I believe they're positioned to dominate the next decade of computing. Their AI models are already 3 to 4 years ahead of competitors, yet this advantage isn't reflected in their current valuation. The mistake most investors make with big tech stocks is assuming they've reached their growth ceiling. The reality is that we're just entering the exponential phase of AI adoption, and Google is positioned at the absolute center of this revolution. Stock number 4, Amazon, ticker AMZN. Amazon has been relatively flat for the past year, leading many investors to lose interest. Here's what the market is missing. Amazon's AWS division is about to become the dominant platform for AI application deployment, creating a new hyper-growth phase. Amazon has been quietly building specialized AI infrastructure that allows businesses to deploy advanced machine learning modules at 40% lower cost than competitors. This will drive a massive migration to their platform. Last month, I spoke with 3 CTOs who were in the process of migrating their entire infrastructure to Amazon specifically for their AI capabilities. When I asked why not Google or Microsoft, all 3 said Amazon's specialized AI hardware gave them a 2x performance advantage. A recent industry survey found that 82% of AI-focused startups are choosing AWS as their primary cloud provider. This represents a fundamental shift in the cloud market that will accelerate in 2025. Stock number 5, AMD, ticker AMD. This is my highest conviction pick for April. AMD has pulled back nearly 15% from its recent highs due to broader market concerns about chip demand. This sell-off has created an exceptional buying opportunity. What Wall Street completely misses is that AMD's new AI accelerator chips are being adopted twice as fast as analysts projected. They've already secured contracts with 3 major cloud providers that will be announced in their upcoming earnings call. I've been aggressively building my position during this dip, and it's now my largest position at 25% of my portfolio. Their current valuation prices in virtually no growth in their AI chip businesses, which I expect to grow by over 300% this year alone. When everyone else is selling based on short-term fears, that's exactly when you should be looking for quality companies with massive growth catalysts. The crowd sells on emotion. Successful investors buy on fundamentals. Now, I want to be completely transparent with you. These 5 stocks aren't guaranteed to explode overnight. Investing always carries risk, and you should never invest money you can't afford to lose. What makes this approach different is that it's not based on hype or hope. It's based on identifying fundamental values that disconnect in the market and positioning yourself before the institutional money flows in. Most people approach the stock market like a casino, chasing hot tips and momentum. But building real wealth requires a methodical system, emotional discipline, and the courage to the contrarian when appropriate. These 5 stocks, Nike, PayPal, Google, Amazon, and AMD, represent opportunities in completely different sectors. Consumer goods, fintech, search AI, e-commerce, cloud, and semiconductors. That's deliberate diversification while still focusing on high potential opportunities. Remember that statistic I shared at the beginning about the market plunging 5% in Q1? The decisions you make during market corrections determine whether you'll struggle financially or build lasting wealth that can change your life. The average investor loses money in the market not because they pick bad stocks, but because they have bad timing and poor emotional control. That's exactly what MarketDash was designed to solve. If you want to implement this exact investment strategy yourself, I built a software called MarketDash.io that does all the heavy lifting for you. It analyzes institutional money flows and fundamental metrics to identify these opportunities before the mainstream catches on. Over 8,700 investors are already using MarketDash.io to transform their portfolios. Many have messaged me saying it's the single most valuable investment tool they've ever used. The greatest wealth transfer in history is happening right now, and it's going to those who have the right tools and take intelligent action while others hesitate. Don't be on the wrong side of the equation. Try MarketDash.io today, and I'll see you in the next video.